Good afternoon, everyone. Jason here. This is your aftermarket update for Friday, May 12th. Before we go into the market update here, I want to spend just a minute or two with you talking to you about a live training event that we're going to be conducting on May 25th. It is during this live training event that I'm going to show you how to draw and trade our market maker levels. We're going to spend time today in today's video looking at the ES and CL market maker levels. And it is these levels that I'm going to show you how to draw and trade in the live trading event. In addition to that, we're going to teach you how to use these levels so that you can reach out and achieve those asymmetrical returns. That is, if you're not familiar with the term asymmetrical returns, then this is simply looking for greater reward than what you are risking. So we like to look at 2, 3, and 4 to 1 or higher risk reward ratios. We're going to talk to you a little bit about how to do that. I'm going to show you some of the tools that you can use to implement. And again, you'll have access to these tools, all of these tools, once you register for the live training event. So let's talk a little bit about Friday's trading here on the ES. So one of the things that we look at, and we have this 7 a.m. measurement. I'm going to show you how to draw and measure these particular levels, but after the 7 a.m. measurement, you had what would have formed up to be the daily structure signal. Now, what you're looking for there on the daily structure signal is if it touches it prior to the 7 a.m. measurement, then you would be looking for it to come up to the daily structure target, or the first stop on the train would be the structure mid, the signal, and then maybe even as deep as the daily structure target. So as the market unfolds today, you can see that we rotate right around, almost immediately goes right down to this daily structure mid. Market rotates there until you get that breakout down to the daily structure signal underneath you, right? Then each one of these levels would be first time touch long ideas. So you get this move into the structure signal and the market almost immediately rejects, rotates around, and then comes back to the structure mid. This is performing exactly the way you would expect it to perform. Market rallies, comes back, and then again, you know you have the right support resistance areas when the market does this. Comes right up to and triple tops your structure mid, rotates around just a little bit, and then comes right back down to the daily structure signal almost to the tick. So we're going to show you how to trade into these levels. All right, we're going to show you that in the live trading event. The other thing that's pretty cool here is you would have had an opportunity to get short right about here, okay? You would have had an opportunity to get short right about there, and then again right here, right? And so if you got short up here, right in this area here, if that was the place that you were looking to get short because you were expecting this sell-off, you could have taken this from this area. There's a couple different ways to do this. If you got here and couldn't, you would be looking to target down to this structure signal. If you got here and couldn't get through it, you might have set your target right there, your trail stop right there. That's 2.5 points, 1 bar above this swing. That would have been an opportunity. Also, you could have gotten short right here at this quad top, and this would have been a really decent opportunity. You would have been targeting down to that structure signal underneath you. Whoops. Get the ruler out here. You would have been targeting that structure signal underneath you, and then you could have gone from this top here into this area, and that's 3.5 ES points. So again, these are a couple of different ideas. This idea here where this blue line is, right here where this blue line is, this is a setup that we are giving you in our $47 package. So again, if you come back here, we have a $47 extended trial package, and it's detailed out here in this professional trade entry. Now, I don't give you all of the details here, but if you do come to this, come to our $47 offer here, we're going to teach you. It's in this area here. It's this trade setup like this. And then if you're interested in that, we give you lots of other tools, but you could come down here and take a look here at the link for the $47 offer, and I'll send you a link to that in the email that you receive here today. Whoops, took the wrong thing out of the way. Give me a second here. All right, so anyway, that is what happened today, or on Friday rather, on the ES. You had our market maker levels. You only had a 7.25 point range here on the ES, and the market was really bound within that range, but your market maker levels gave you excellent structure on the day. And again, that's one of the real benefits of having this tool. But here's the real key to this. Not only do you have the tool and the indicator, I'm going to teach you how to draw it so that you can put it on, you can put this indicator on other charts, or you can use these measurements for any market really that you would like to do. So different than most vendors, we're not giving you just an indicator. We're going to teach you how to draw it. So let's talk about where we actually traded today. I didn't trade any, or on Friday rather. I didn't trade anything on the ES. The range was just, for my taste, a little narrow, and we had some opportunities that we were looking at here on the CL. Now we had a little bit of tough luck on the CL today. Friday, I keep saying today. On Friday, we had some tough luck on the CL on Friday. And what I mean by that is, I'll show you. Our first opportunity was a short right underneath this revision signal here. Our short was going to be right underneath this revision signal, and our target was going to be right in this kind of this halfway point between extension 1 and structure target. So that's 40 down to 28. So we were going to look to have our target right here. So if you were in the trading room on Friday, you remember that we were looking to target right here at this 38 level. So what happens? We get down into this revision signal, we rotate around, and right here we get into this, trying to get into this trade here at the revision signal. It comes back, and what you can't see, it's a 3-minute bar, but it pushed down and then pulled back up into our revision signal, and we were looking to get short at 69. And as happens occasionally, I get hit but no fill twice, and I'll show you that here just so you know that I'm not making it up, but we got hit but no fill twice there at 69, and then the market almost immediately sells off down into this 38 target area, right? This was going to be our target, as it was kind of the center halfway point between these particular levels. So we'll turn just so you can see what I mean here again. Turn those off. It was the midway point between the structure target and the structure extension 1, these market maker levels, and that was going to be our target. Now, the other thing I want you to notice here is just how this structure signal formed up here, right in this hit at right around 8:10 a.m., came down to the structure mid, came down to the structure signal, rallied, came down to the structure target, rallied, and couldn't quite make it down here, but that was to be expected, and that's why we had this target down here. So again, market maker levels giving you a really clean opportunity to get what you needed to get done. Now again, you may ask yourself, well, why didn't you take that short off the structure signal? Well, for me, this is right after the open. Personally, I like to let the market open up a little bit before I get right into a trade. I tend to have better luck when the market does that, but this absolutely was an opportunity, just like I talked to you on the ES a minute ago. When the market hits this structure signal, it's either going to go to the structure target above, or the mid, the signal, or the target down below. In this case, it went from structure signal down to the structure target down here, and that was 55 ticks. So again, the range was really small, though, right after the open today. So this is, while it looks really clean and good here on the chart, this is 8:03, and this break didn't happen till almost an hour later. So again, market was really moving slowly. And let's see here, this total range after the open at that point was a very, very narrow 25 ticks. So it's hard to trade like that. But what we did is we did try to get down and get in underneath this at the 69 area. We'll turn these off for a second. I'll bring in these revision signals. And right here, you had a revision signal right here at 71. And so once we broke that 71, we were trying to get in at the revision signal again, just under that at 69, and I got hit but no fill twice. So that happens, right? Sometimes that happens. What we were looking for, though, is a target down here to this blue line down here to 38. That's kind of the midway point between extension 1 and structure target. And then we got long here, and this is where you're going to see us get long. Our target was going to be up here. Let's see, we're going to turn on the revisions here. Settlement today was at 83, so if I just were to turn on the secondary levels, you would see settlement on this day was right up here at 83, right underneath the structure mid at 83. And so my initial target was going to be up here to 84. That's where my initial target was. So we do get in. I'm going to show you, I'll show you where we get filled. And then the market rotates, rallies. And then I have, it's right at around 10:30. So what was happening here today is that as the market began to rally up, we got as high here as 61. I was trying to keep myself in this thing a little bit. And then as we got closer to the close, I get stopped out right here at the structure target. So just remember, this was a real battle. I get in here at 38, at 9:48. We rally up here. We come all the way into about 10:30. So I was in this trade for almost an hour. And so as we got through the European session close, I just didn't want to give too much back, right? We've been 38 as high as 61. So that is 23 ticks. This pullback here to 48, I wanted to protect at least 10 ticks. It comes down, takes me out to the tick at the structure target. And remember, I told you 84, 85 up here at this daily structure mid was going to be the final kind of stopping point that we were looking for. And then the market rotates. I mean, you'd have been in this thing all day, put up with a lot of heat. And then by the time it ends the day, it does get up here right to your structure mid there right after the close at 85. So that was going to have been the final target. I would not have made it there. In fact, what I would have done, we talked a little bit about this in the trade room as we were managing it. We had a revision signal right up here in this right here. We had this revision mid at 70. Probably would have looked to take it out at 70, and definitely by the time we got up here to 40 ticks. But the initial target on the trade was that daily structure mid up there at 85. I thought this market would reach back to settlement, as it typically does, kind of retraces back to end the day right around that sweet spot of our retracement area, and that's really what it did. So anyway, that is the way that the trading went on Friday. So again, for the sake of transparency here, we did not take advantage of those two CL moves. Full advantage of them, rather. We got hit but no fill on one. And by the way, this is a good discussion point while we are talking about hit but no fill. I get asked a lot, and I got asked again on Friday, why don't you just mark it in when you get hit but no fill? You can. You can absolutely do that, and that becomes a preference. But my psychology and philosophy that helps my psychology is we're trying to keep these stops small, 10, 11, 12 ticks, something like that on the CL we're looking for. In this case, 38 to 83 would have been what we were looking for in terms of a target. So that would have been 45 ticks with an 11 tick stop. That is a 4-to-1 risk-reward ratio. We eventually got there. But if you mark it in, and I've been slipped as many as 10 ticks, right? And so I don't like 20 tick stops. So if my original stop was 11 ticks and I got slipped in at 10 ticks, I would have had to stop at 21 ticks. And I just don't like to do those tall stops. Really, for me, that's a psychology slash tool, just really a psychology tool and a rule of thumb. The other thing is that buses come again, right? There are always more buses along the way. So if you miss one bus, then your bus will come again in a few minutes, and it's a bit of a bummer when it happens, but that's trading. So again, that's why I don't just mark it in, and sometimes the moves miss me, and sometimes they get taken out to the tick. And in this case, it was the T-shirt that we always talk about, hit but no fill, and then to the tick, and that's kind of what we experienced here today. But it was still a positive day. Your market maker levels really provided you with the structure and the context for the market on this particular day. And so it was, again, like we said, they really did their job. Sometimes the market is a little bit cruel to put a fine point on it. So I'm going to let you watch the hit but no fill. I'm going to let you watch me get in there at 38 long. And I just want to show you that we're not retrofitting these ideas to the levels that we actually took these or tried to take these trades in the live trade room. So I'm going to let you watch these hit but no fill and this entry there at 38, and I'll be right back with you here on the other side. I am going to put in short right here at 69, short 69. Looking to get short 69. There's hit but no fill. You've got liquidity up here at 70. There's another hit but no fill at 69. All All right, I'm 38 long. That's just, I'm thinking out loud here. 38 long. There's 40. Okay, there's 38. That was a little bit aggressive. So 35, stop 27, in at 38 here. Okay, we need to get up through it. Like I said, if we get up to 50 here, if we get up to 50, my target, by the way, is back into this back right now. The structure mid at 84 is my target. 84 is the target. Well, that was definitely a good news, bad news scenario. The bad news was we got hit but no fill on the way down, and we got trail stop to the tick on the way up. But that really is bad news, but it's relatively small bad news compared to what the really good news is. The really good news is that we had identified the right areas to enter. We'd identified the right targets. We had the right risk reward on that final trade. You saw that the stop was down there at 27. It was an 11 tick target. You heard me, sorry, an 11 tick stop. You heard the target was up there at 84. So that was 46 ticks away. That was 4-to-1 risk reward. And as you look right here, the market eventually got there to your daily structure mid. So yes, we didn't execute it 100% all the way to the target. That happens sometimes. That's a little bit of a bummer, but that's just trading, right? That's the bad news again. The good news is that the levels and the information was very accurate, and we just got dinged around a little bit based on some other variables in trading. So again, this is the training information. We're going to teach you how to draw these levels on the training on May 25th. We're going to teach you how to trade them, draw them, how to look to spot those bigger picture targets, and how to get those asymmetrical returns, which is the real key to long-term trading success. So again, as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.